Magandang umaga, Pilipinas! Good morning, good afternoon, good evening from wherever you are joining around the world. Welcome to today's webinar where we will try to solve agricultural investment risks, empowering smallholder farmers through microinsurance and microfinance. We are streaming to you live the SEARCA online learning and virtual engagements or SOLVE platform via Zoom and Facebook Live. My name is Jean Labios, and I am a program specialist of the Training for Development Unit under the Education and Collective Learning Department of SEARCA. I will be your moderator for this morning's webinar. The short video shown earlier has given you a glimpse about SEARCA and what we do. SEARCA is hosted by the Philippine government in the campus of the University of the Philippines, Los Baños. So we are coming to you live from Los Baños, Laguna, the special science and nature city of the Philippines. This SOLVE webinar is SEARCA's immediate response to the emerging impacts of the COVID-19 global pandemic on food security. By maximizing the use of information and communication technology platforms to inform, educate, and share evidence-based solutions and tested technologies, as well as best practices on the ground. If you are new to this webinar, this is actually the 26th webinar since it was launched last April 28, 2020. Today, we will be joined by experts who will share their experiences and insights on agricultural insurance and finance. SEARCA's 11th five-year plan, which was launched in July 2020, identifies agribusiness models for increased productivity and income as one of the priority areas that would accelerate transformation through agricultural innovation. Before we proceed to our online conversation this morning, please allow me to quickly go over some statistics gathered from the SOLVE webinar held on March 10, 2021. The infograph shows that 72% of our online viewers were female and the rest were male. It also indicates that more than 70 individuals tuned in via Zoom, while over 200 viewed the webinar through SEARCA's Facebook page. Lastly, we are happy to note that we've had online attendees not only from the Philippines, but also from Cambodia, Myanmar, and Thailand. Let me now go over the program flow, which is currently shown on your screen. After my introduction and a few housekeeping rules, we will have our first speaker, Dr. Arup Chatterjee, who is the Principal Financial Sector Specialist of Sustainable Development and Climate Change Department of the Asian Development Bank. Dr. Chatterjee will open our discussion this morning by presenting his insights on agriculture insurance for boosting farm productivity and income. Mr. Bonifacio Pales, Senior Vice President of the Philippine Crop Insurance Corporation, follows with his presentation on the state of the Philippine Agricultural Insurance Program. Our final presenter is Dr. Jaime Aristotle Alip, founder and chairman of CARD MRI. He will talk about their strategies in CARD MRI to promote awareness of their microfinance and microinsurance services. I know you are all excited to listen to our speakers, but let me first encourage you to send us your questions. How do you do this? For those of you who are tuned in via SEARCA's Facebook page, you may type your questions in the comments section. Kindly indicate your location now and or country of origin. If you are tuned in via Zoom, please post your questions or comments in the Q&A box, which you will find in the menu bar on your screen. Kindly indicate your location and or country of origin as well. Our SOLVE team will collate, curate, and compile those questions for me, and I will convey them to our speakers. Hopefully, we will be able to cover as many questions as we can in the time remaining. Please be clear when you are posting a question to a specific presenter or if it is a general question that anybody can respond to. We will do our best to get as many questions as we can during the open forum. May I remind everyone to kindly refrain from posting your email address in the comments section. You can provide this information to us upon responding to our evaluation form and e-certificate request, and the link will be available and posted at the end of the webinar. Please note that this webinar will be recorded and will be made available on SEARCA's Facebook page and YouTube channel. Today's presentations will be uploaded on SEARCA's website at www.searca.org. That's www.searca.org. The slides shown during the past webinars have already been posted there. For your social media posts, especially on insights or takeaways from this webinar, please use the hashtag SEARCASolve. If you have issues or are experiencing technical difficulties with the Zoom online platform, please contact us at solve@searca.org. That's solve@searca.org. Moving on to today's presentations, our first speaker is Dr. Arup Chatterjee. He is the Principal Financial Sector Specialist of the Sustainable Development and Climate Change Department of the Asian Development Bank. His current work involves financial, governance, risk management, and regulatory reforms across different industries. He has held stints with the International Association of Insurance Supervisors at the Bank for International Settlements in Switzerland and Insurance Regulatory and Development Authority of India. Please welcome Dr. Chatterjee.
Thank you, Jean, for a very generous introduction. Good morning, ladies and gentlemen. A special welcome to Mr. Bonifacio Pales and Dr. Alip, my co-panelists for today's discussion. My presentation today, as Jean mentioned, is on agriculture insurance for boosting farm productivity and income. And what I will be doing in the next 10-12 minutes is to explain a little bit about why agriculture insurance is necessary and how it resonates with the mission of SEARCA and what would be the way forward. If you see here, agriculture sector absorbs about 22% of the damage and losses caused by natural hazards. And 84% of it in drought-related situations, about 84% of the impact is on the agriculture sector. If you look at countries, more than 0.5%, 1% of the GDP is impacted by, if you see the countries impacted, their annual losses would be more than 1% of the GDP by 2030, you know. So this is where agriculture insurance can play a role. And this is just because of natural hazards. If you add to these the transboundary pests, diseases, livestock related diseases and losses, this will be much, much more. So no solution to climate change and disaster would be complete without agriculture inputs. Farmers are at the front line of climate change, and there are strong droughts, extreme rainfalls, and flooding and stress. But if you see here, the losses due to agriculture productivity is not only due to production-related losses or crop failure-related losses. There is also a need to look at handling and storage, and that's where the value chain becomes important to preserve farm incomes and ensure that farmers benefit from the productivity gains. So therefore, in addition to looking at production-related losses, we need to look at logistics, putting infrastructure in place so that the losses can be minimized and also efficiency gains can be translated. Of course, beyond distribution and market-related losses, we also have losses due to processing and also due to distribution and market, which also need to be addressed. So agriculture is a risky business, and therefore lending to agriculture is not easy. If you see, there are some losses which are instigated by price changes and all, and those things definitely are areas where insurance cannot provide any solution. And then there are issues related to production-related losses where insurance in some cases can provide certain solutions. And then, of course, there are the financial-related risks, which again, there is a combination. Insurance is a part of the solution. We need to look at other sources of finance like credit, and also look at other financial instruments like forwards and futures markets, where farmers can minimize their losses by hedging their price risk. And then, of course, there is the liability risk because of changes in government policies and regulations, which also impacts the farm sector. So farmers are being at the front line of the risk. They know the risk better than anybody else. And they already use a lot of risk mitigation, risk reduction measures to minimize their losses. So risk management is not new to them. They look at crop diversification, they look at different planting dates, supplement their farm income through livestock and other off-farm income, go for credit, including microcredit. They delay sale of crops. Of course, there is an opportunity cost here. If there can be crop losses to the produce while during storage, and therefore the importance of logistics becomes important. They also use improved technology also. It's not that technology is for the first time coming to the farmers. They have been using new technology, like they started with tractors, combined harvesters and all. So they were all mechanized technology. Now we are seeing digital technology coming in. So farmers have embraced technology even in the past. And then there are issues in terms of increased water conservation techniques, where we need to look at preserving waters and also bring in crops which are, say, drought resistant, because that is a very important component today, especially because many of the farm areas are water starved and they are all dependent on rain-fed agriculture. And water tables are going down. And then there are adjustments to livestock management. They also sell livestock during a crisis. And also something new, which is, it's not new in the Philippines, but in many countries it's still new, having crop insurance. Of course, crop insurance in the modern sense is something new, but farming communities all over the world, especially in Asia, have been using community-based risk-sharing models to manage crop insurance even in the past. And this is where we possibly need to understand how we look back and look ahead by integrating elements of risk sharing and risk transfer in management of production-related losses, especially for crops. So the farmer's decision to adopt these risk coping strategies, which I mentioned, are influenced by the various factors. And primarily it is the land tenure agreements in case they are not owning lands, and also the socio-economic factors. So the perception of the risk will all depend on if the farmer is a contract farmer. So the organization with whom the farmer enters into a contract, they generally take responsibility for managing the risk. And therefore, they are not too bothered about insurance. Of course, they do use modern technology and risk management practices, but the insurance aspect is taken care of by the purchaser of the ultimate produce. Then there are issues where farmers diversify their crops, so a loss to a single crop is met by a higher gain or income in a different crop, so they are able to stabilize their income. And then, of course, the availability of credit is also important. If there is easier access to credit, definitely access to insurance becomes a little bit of a, well, the demand for insurance becomes a little bit of a challenge. And here, the problem is the farmers are unable to differentiate between what is known as a idiosyncratic risk and what we call as a covariate risk. So idiosyncratic risk is a risk where say 2 or 3 farmers out of 100 are affected, and the remaining 97 can contribute for the welfare of those 3 or 5 farmers who are affected. So insurance doesn't make sense there, and that's where I was talking about the risk sharing element. But if all 100 farmers are affected at the same time, then nobody can help each other. And therefore, those are the points where insurance becomes relevant. And therefore, there is an awareness element which needs to be built in when we look at justifying why insurance is a good thing to do. Of course, in addition to that, there are factors like the age of the farmer, their educational status, their monthly income, their family size and all. And especially small and marginal farmers who are almost hand to mouth do not find insurance affordable, even though they know the benefits of that. So there is, most of the times, there is a need for a strong state support, either in the form of a premium subsidy or in some other form. So what I said was, the farmers are managing their risk at the bottommost layer of the slide through risk retention. And in some cases where there are prevalence of cooperatives and strong community-based organizations, risk pooling also works. There is community ownership of assets. They might own an irrigation pump together, or they might own certain assets like a combined harvester, or even looking at risks also, production risks themselves. So risk pooling helps, but again, up to a certain extent. They have their limitations since the farmers are not educated enough. They are not, these funds are not managed very efficiently, and therefore there are always risks of these funds going belly up. So therefore, we then have to look at the next layer, which is risk transfer, or where insurance comes in. And this is where there are a range of insurers who play a role. One is the commercial insurers, private insurers. In many countries, there are the state-owned insurance companies, something like the Pcic in the Philippines, and then who in turn look to further diversify their risk through reinsurance. And in many cases, the government also provides what is called a backstopping arrangement. So there is a need to look at a risk-layered approach to risk management. The more frequent losses are something where insurance becomes very, very expensive, and therefore risk retention and risk sharing becomes more useful, and it should be more attractive. And where the losses are less frequent and more severe in nature, their insurance should be able to play a role. And on the left side of the slide, you will see that what happens if there is insurance or no insurance after a loss. So if you see the topmost line in this on the left side, the household is able to cope and recover better if they have an insurance after a shock. Without an insurance, especially households which are just at near the poverty line, they slip below the poverty line. And what the bottommost line is trying to indicate is how insurance helps in stabilizing the income. Of course, again, let me reiterate, nobody profits from insurance. The farmer is not better off. The farmer is able to stabilize the income. So they are more or less back to the same state they were before the loss. So that is what insurance ensures. Now, therefore, this is very, very important for farmers to manage their productivity losses and income shocks. And as a result of that, they can invest in new technology, hybrid seeds, which can result in higher incomes and higher productivity. So let me explain to you very briefly. It's not a very easy topic, agriculture insurance by itself, but basically before planting, farmers work with the insurance companies and their agents to tailor an insurance product. Many a times, insurance products are not tailored to the requirements of the farmers, and sometimes they pay premium for risks which will never happen or occur in their geography. So after a product is tailor-made, they help. There is an underwriting where the farmer declares or provides certain important information, and many at times we have found that the data is not available, so this information becomes useful for the insurance company. Based on that, they provide a price or offer a premium, and then they enter into a contract at the set rate to provide protection for a particular loss. Cases where the farmers cannot afford premiums or where the government intervenes, they also subsidize the premium. So there can be 100% subsidy, there can be partial subsidy, it depends on the management. And then in some cases, there is also a risk management pool or a dedicated agriculture insurance company, which basically pools all the premium. At times it is reinsured with a reinsurer. Sometimes it is not, but the greater the retention, lesser the reinsurance and lesser the premium outgoes. So farmer benefits if there is greater retention of risk, or I would say an optimal retention of risk. So when a disaster strikes, there are two types of insurance. One is an indemnity insurance, where the insurance companies sends claims adjusters to assess the loss, and upon verification, the claims are paid. This is a little bit time consuming, but this is the one which is most popular or happening in most countries which have agriculture insurance, and PCIC is also doing the same. You'll hear more about what they are doing. And then the other is the parametric insurance, where there are certain parametric triggers or indices which are developed. And when a certain index is breached, payment automatically goes to all farmers in that geographical area. The benefit of this is that all farmers get certain compensation without real assessment of the loss. There is what is called a basis risk. So when there is a basis risk, what happens is there are farmers who are affected more, who might still get a lower compensation, and some farmers who are not affected at all, they get a higher compensation. But those are things which can be calibrated, and we can come to a more realistic situation if a product is piloted and developed over a period of time. So of course, as I mentioned, production loss is one of the loss, and crop insurance can manage it. But then from the farm to the ultimate table, there would be a lot of other actors also involved, and they would look at different types of financial instruments to assess them. And so there are other insurance solutions also. Say while the crop has been harvested and it is waiting for being sold at the wholesale market, there might be a heavy downpour and the entire harvested crop is lost. So if an additional insurance is purchased, the farmer's income is protected. Crop can be lost during transit also. So marine insurance is there where they can protect these types of losses from accidents. There can be perishables like potatoes, where they put the crop in a harvested crop in a cold storage, and due to power outage, there is failure and the whole crop rots, So when the farmer is expecting to gain through a higher price over a period of time, they are unable to do so because of the cold storage failure. So there are insurances which can take care of these types of problems also. So, and then we are looking increasingly today at resilient value chains, robust market connectivity, better product traceability, and things like that, which will enable better payment and access to credit and government finances also. So to access all these things, again, if you have insurance, insurance acts as a collateral, and banks and financial institutions are ready to provide a loan provided you have an insurance. So we need to look at areas where insurance can help in de-risking also. and also in protection and access to finance. And in this sense, again, as I started with the premise that insurance is part of the solution, we have to look at different risk-sharing instruments also, like guarantees, government social protection schemes like interest rebates, interest subvention, then of course subsidized insurance and other modes of financing. So this is something which needs to be considered at all times. So if agriculture has to be modernized, and commercialized, we have to look at more capital intensive agriculture. And whenever capital is invested, the capital needs to be protected, whether it is the machinery or technology and all. And insurance solutions are available to protect that, not only to protect the assets, but also loss of income and the cash flows. So these are things which also need to be considered when we talk of agriculture insurance, and just not about production related losses. So agriculture insurance and agriculture credit will work hand in hand to ensure that agriculture incomes are boosted along with farm mechanization and modernization. And insurance will, as I mentioned earlier, will help in promoting off-farm and on-farm employment, smoothing income, increasing productivity, and reducing vulnerability. So in terms of the way forward, we need to create awareness of the risks. So what are the risks which farmers face? What are the risks they can manage, and what are the risks they need to transfer? So they can manage risk through reduction, through mitigation, and things like that. Then we need to identify the appropriate financial instruments which can help in reduction of the risk and their effectiveness. Say microcredit might be good for a farmer who wants to purchase seeds, but it may not be something good for him for buying a agriculture equipment, which might have a life of 5 or 7 years. They have to continue paying over a period of time. And we need to look at other forms of instruments like leasing and all, where farmers can benefit. And along with that, insurance can be piggybacked. We need to identify the characteristics of insurance, under what conditions insurance will pay and insurance will not pay. This is an area which is very, very controversial and debated. The insurance industry suffers from tremendous lack of trust. But at the same time, I would like to inform the audience that insurance is a legal or a quasi-legal contract. So insurance companies cannot run away if the contract, if they are not providing what is promised in the contract. So the contract wording needs to be very, very clear and understood, So that is something where awareness building will help. We need to therefore recognize the conditions of insurance and also recognize the policyholders' rights and responsibilities. Data is a big problem. One of the reasons for the high price in insurance, or why insurance becomes unaffordable, is because of lack of data. The government and the insurance industry needs to invest in the data. Digital technology offers a lot of solutions today in terms of remote sensing technology, the financial what we call the artificial intelligence and technology, and also the modeling technology and things like that. So we need to see how technology can be blended. Technology has to be the backbone for any solution to succeed. So technology plus finance are both necessary, and we need to be integrated. And we did that on the right side, the topmost figure shows a pilot we recently did in Bangladesh on weather indices. We developed 3 indices, one for excess rainfall, one for deficit rainfall, that is drought, and the third for storm surges, where saline water enters the field. And these were all done through a grant technical assistance, and we developed parametric indices. Insurance premium was subsidized. 50% of the premium was paid by the government, 25% was paid from the project, and 25% was borne by the farmers. This was a pilot, and premium collection was done through mobile devices, through the mobile payment system, and claims were also disbursed through the mobile channel. So farmers got the claims directly in their mobile accounts. And since this was a parametric insurance, we used weather-based technology. There were weather stations installed in the fields, and there was information going through remote sensing satellites to the Bangladesh Meteorological Department, who were collating data. And even before the farmer knew there was a loss, they were getting payment. So this was quite a good exercise in that sense. And in terms of insurance, it was break even. The insurance company did not suffer losses, though there was adverse selection because we selected all the 3 districts which were most prone to losses. So the lessons learned was that we need to have a combination of vulnerable districts and good districts so that the claims experience looks more favorable. We need to work with good reinsurers so that reinsurers are able to protect the balance sheet of the insurers. And then, of course, there can be more takeoff and replication of such insurance. So with these words, I would like to conclude my presentation. Thank you for a patient hearing, and I'll be open to question and answers. Thank you.
Thank you, Dr. Chatterjee, for sharing with us the different risks in agriculture and how agricultural insurance works and how it is actually beneficial, especially today. For our next speaker, we have Mr. Bonifacio Pales, Senior Vice President of the Philippine Crop Insurance Corporation, or PCIC. Before becoming SVP this year, Mr. Pales has been with the PCIC's regional office in Region 11 since 1982. He rose from the ranks and held various positions from insurance adjuster to agriculturist to regional manager. He will be joined today by PCIC's officer in charge of the Business Development and Marketing Department, Mr. Manuel Cortina. Mr. Pales and Mr. Cortina, the screen is yours.
Thank you so much, Ma'am Jean, for that very nice introduction. With all due respect to all, good morning, good afternoon, and good evening, wherever you are in now. I am Mr. Bonifacio Pales, the Senior Vice President of PCIC, or the Philippine Crop Insurance Corporation. In behalf of our dear President, Attorney Joby C. Bernabe, and our Board of Directors, led by Chairman Sol Ignacio and its member. With me right now is Manager Manny to help me discuss later. Thank you for SEARCA for having PCIC here. And I wish also to thank my fellow speakers. Thank you, Dr. Arup, for emphasizing the utility value of insurance, the crop insurance, and so encouraging the farmers to insure. So without much ado, I will go direct to the topic assigned to us. It is the state of agricultural insurance program. And with this, we will discuss along the line with this 15 minutes time, the topic outline, the brief background of PCIC, or the Philippine Crop Insurance Corporation, the government insurance, the insurance program, the PCIC roadmap, results, operations and accomplishment, plans and strategies. And so let's start with the brief background of PCIC. So on the legal basis, the PCIC was created under Presidential Decree 1467 on June 11, 1978. Its charter was amended by PD 1733 on October 21, 1980, and RA 8175 on December 29, 1995. So the mandate for this PD 1467, as amended by PD 1733, and Republic Act 8175 tasked the PCIC to provide insurance protection to countries' agricultural producers, particularly subsistence farmers, against loss of their crops and non-crop agricultural assets on account of natural calamities such as typhoon, flood, droughts, earthquake, and volcanic eruption, including plant pests and diseases and or other perils. So PCIC is the implementing agency corporation of the government crop insurance program attached to the Department of Agriculture. Its principal mandate is to provide insurance protection to agricultural producers, particularly the subsistence farmers, from crop losses arising from natural calamities and pests and diseases, non-crop agricultural assets losses due to perils that assets had been insured against. And so this is PCIC, the corporation under Department of Agriculture, delivers services through its head office in Manila, 13 regional offices throughout the country, 58 extension offices, and 20 service desks. These are the benefits of agricultural insurance. Protects farm investment, including crops and other properties. Serve as substitute collateral for farmers and fisher folks who have no property in securing loan extended by lending or financing institution. Serve as enabling mechanism that encourage greater investment and production from farmers and fisher folks, thus promoting food security and poverty alleviation. Serve as effective financial adaptation measure against destructive effects of climate change. So we established in 1981 with the PALAY, and with this PCIC and crop insurance program in DA paradigm. So on this aspect program outcome, the financial risk protection for agricultural producers increased. A DA result supported modernized value chain system. We provide risk management tool, empowered farmers and fisher folks, and strengthen partnership with private sector, the LGUs, the NGAs, the SUCs, and with the other stakeholders. So we have insurance program. We have the insurance lines. We started with palay or the rice crop insurance, then followed by corn insurance. Then we have the livestock insurance, and we have also fisheries insurance, and we have non-crop insurance, and we have the high value crop insurance, and we have also the credit and life term insurance for farmer 1 year coverage. So what is rice and corn crop insurance? An insurance protection extended to farmers against losses in rice and corn crops due to natural calamities as well as infestation of major plant pests and diseases. And for high value crop insurance, all crops aside from corn, rice and corn are under high value crops insurance. It is insurance protection extended to farmers to cover both the short, gestating, and perennial types of crop against natural calamities as well as infestation of selected plant pests and diseases. Now, for the livestock insurance, this covers an insurance protection for livestock research against loss of sample carabao, cattle, horse, swine, goat, sheep, poultry, and game fowls, and other animals due to accidental death or diseases. What about the non-crop agricultural asset insurance? This insurance protection extended to farmers against loss of their non-crop agricultural assets like agricultural building, warehouses, rice mills, irrigation facilities, and other farm equipments due to peril such as fire, lightning, and earthquake. And so we have also the fisher folks under the fisheries insurance and insurance protection extended to fish farmer, fisher folks, growers against losses in unharvested crop or stock in fisheries farm due to natural calamities and fortuitous events. So we have also the credit life term insurance. We have the agricultural producer protection plan. This protects the life of the farmers, natural death, and also we have this accident, cause of death. We have also loan repayment protection plan, and we have the accident security scheme. This is 1 year in coverage of the farmer. I will request Manager Manny Cortina to discuss on the roadmap of PCIC. Sir Manny, please take it away.
Okay, thank you, SVP Pales. Good morning to all the virtual participants, co-presenters, and SEARCA moderators. So to continue, in our roadmap, if we get 1 billion increase every year, we could target 56% penetration rate in the year 2025. This is in terms of the number of farmers that we can cover under the rsbsa list, consisting of 10.9 million of farmers and fisher folk. But out of the 10.9, around 60% are farmers. Other are farm workers. So therefore, it's a 7% increase every year. Briefly last year, okay, on the results of operation and accomplishments, despite the difficulties and limitations brought about by this pandemic, we were able to enroll around 3 million farmers and fisher folk, and we spent and allocated around 4.8 billion on free insurance to our farmers. Breakdown are as follows per region. Last year also, we paid almost 3.4 billion worth of insurance claims to around 585,000 farmers due to natural calamities, pests, and diseases. So breakdown of indemnity payments are as follows. Other notable accomplishments of PCIC last year are as follows. PCIC topped the GOCCs, or government-owned and controlled corporations, for GCGs, or Governance Commission for GOCCs Corporate Governance Scorecard for 4 straight years with a rating of 100.52 out of 104. So actually that's a result of the 2019 and awarded in 2020. So Corporate Governance Scorecard is a tool used by GCG for assessing the governance performance of GOCCs. The areas GCG examines are the following: stakeholders relationship, disclosure and transparency, board responsibility, and also scorecard is patterned by GCG after OCG, an ASEAN corporate scorecard. And we are happy that we topped that award. We also rated 97.72% in our performance scorecard in GCG, a tool consisting of matrix and performance indicators that measures the progress among GOCCs in attaining their goals and mission on the areas of social impact, stakeholders relationship, finance, and internal processes. Some of the PCIC measures are amount of cover, percent number of insured cover over total number of subsistence farmers and fisher folk, and processing of claims, and competency of employees. PCIC also garnered highest satisfaction rating with 96.46% conducted by the Development of Academy of the Philippines. Therefore, our farmers are satisfied with the products and services of PCIC. On plans and strategies, on the implementation of 1DA, this is a holistic approach of the Department of Agriculture to transform agriculture and fisheries. So first, continue to expand in insurance coverage among farmers and fisherfolk using other fund sources, including those to be generated from LGUs. So PCIC is not just dependent on the subsidies from the national government, but PCIC also tries to partner with either municipal, local government units or the provincial level to provide also subsidy for their farmers and fisherfolk. Tighter coordination with ACPC or the Agricultural Credit and Policy Council for providing insurance to the capital access for young agripreneurs or KAYA, and the Agri-Negosyo Loan Program or ANYO, including on information education. Pursue conversation with ACPC on greater financing and insurance coverage for landless farmers and fisherfolk, and optimize insurance coverage in organized farm clusters. On digitalization, first, increase or enhance use of smartphone technology to cut field validation time for insurance enrollment and claims. So briefly, we used to have the manual way of assessing damages in the field. But now using the smartphone technology, our insurance adjusters are now capable of transmitting insurance field adjustment reports directly to our servers without using manual papers and reports. So now we're trying to enhance this technology to further decrease the number of days in terms of claims processing time. Scale up implementation of the PCIC DBP or the Development Bank of the Philippines agreement on use of later's multi-channel distribution facility that enables speedy release of insurance claims to bank and bank farmers and fisherfolk. So just last quarter, we piloted this multi-channel distribution facility wherein insurance claims or indemnity payments are coursed through financial service providers, partners of the bank, like for example, the MLUELIER, and now trying to expand this technology by also considering other FSPs available. Support the Asian Development Bank and Bangko Sentral ng Pilipinas projects to assess feasibility of scaling up digital tools, including satellite-enabled solutions to improve insurance efficiencies, including in ensuring commercial viability of non-subsidized insurance. So we have this ongoing public-private partnership on agri-insurance facilitated by Asian Development Bank. And just last year also, we piloted satellite imagery-based decision in agri-insurance with Sature as the technology provider. Lastly, build online platforms for insurance registration and filing of claims among farmers and fisherfolk. So this is actually one way of adapting the situation because of this pandemic. So we are having this strategy of building online platforms, not just for filing of our insurance claims or insurance applications, but also filing of claims. On partnership strengthening, so PCIC also would like to expand current 4,000 strong insurance partnerships of lending cooperatives, irrigators associations, other cooperatives, rural banks, and other civil society organizations. So we value our partners. So they are our partners as our accredited underwriters or our accredited solicitors. So also give special focus on increasing municipal or city local government units engagement to 95% of the total. Okay, from 90% of 2020 and or engage around 1,552 of 1,634 total cities and municipal local government units. On strategic communication, so we use the insurance partnership as communication channel to conduct intensified insurance education and advocacy among all stakeholders, but primarily on farmers and fisherfolk, and also enhance current information and education campaign materials including translating them into local languages or dialects. Thank you for listening and have a good day.
Thank you, Mr. Pales and Mr. Cortina, for sharing with us the PCIC's role as the government's implementing agency for its crop insurance program. We note the different insurance programs that you have and your implementation strategies to support 1DA. We also congratulate you on the achievements you have achieved on your achievements in the past year. And this is good news to know that plenty of farmers and fisher folks are provided with support through insurance. Again, may I remind our online attendees watching the webinar via Facebook Live, please start typing your questions in the comments section, including your location or country of origin. If you are tuned in via Zoom, please post your questions in the Q&A box, which you will find in the menu bar on your screen. Kindly refrain from posting your email address in the comments section. You can provide this information to us upon responding to our evaluation form and e-certificate request. The link will be posted at the end of the webinar. While waiting for our final speaker's presentation to be shared on screen, please allow me to tell you more about him. Dr. Jaime Aristotle Alip is the founder of the Center for Agriculture and Rural Development Mutually Reinforcing Institutions, or CARD MRI. It is the 2008 Ramon Magsaysay Awardee for Public Service. Dr. Alip is now the Chairman Emeritus of CARD NGO and continues to chair the board of the major institutions of CARD MRI, which are CARD Bank, CARD SME Bank, and CMDI. Dr. Alip served in various key positions in the Philippine government. Undersecretary of the Department of Social Welfare and Development from 2002 to 2003, Assistant Secretary of the Department of Agrarian Reform from 1996 to 1998, and Deputy Executive Director of the Agricultural Credit Policy Council from 1988 to 1992. As an educator, he now serves as the Dean of CMDI Tagum Campus. He is also an eminent fellow of the Development Academy of the Philippines, or DAP, and since 2012, he served as an adjunct professor of CPAF, University of the Philippines, Los Baños, until last year. Without further ado, please welcome Dr. Alip.
Thank you very much, Jean, for the nice and warm introduction. I feel more humbled to share with you the experiences of CARD MRI in microfinance and microinsurance. So today is about promoting awareness on microfinance and microinsurance services, on how the approach of CARD MRI. So I'll tell you our story. This is a brief background of what CARD MRI is all about. I started CARD 35 years ago. I was very young at the time. And I started this with 20 pesos and an old magic typewriter. This is where I type proposal and send all over the international and local donors in our country and also abroad. My vision was to establish a bank that is owned and managed by the poor. Financial institution that is owned and managed by the poor. Because to me, poor people are poor not because of access, but because of control of resources. So to me, I want to give ownership to the very poor people in our country. I started this with an NGO. If you go to the next slide, please. This is how I started. First started 35 years ago as an NGO. And as an NGO, we were doing financial help to our farmers, to our landless rural workers. And after 10 years working for the NGO, we were able to have and to create the first microfinance bank in the country. This is CARD Bank, the first microfinance-oriented bank in the country. And this is substantially owned by the members. We completely turned the traditional banking system upside down. Whether it's collateral from banks, we don't ask for collateral. Whether there are voluminous documents, all kinds of feasibility study, I don't ask for these things. I only need one page. And if there is a loan that is registered, within the day or in 2 days' time, we can release the loan. So we have cut all the bureaucracy, all the paper requirements. And today, Card Bank has spin off with two additional banks. We have Card Bank focusing on the rural areas, Card Rizal Bank focusing on the urban areas, and all the graduates of these different institutions or of Card Bank and the RBI and the NGO, those who graduate from microfinance become SME. So we have another bank that respond to the requirements of our clients who have grown to become SME, because I like this because they have also been able to expand their business so that they don't slide back to poverty, and they create employment to the community at large. And then we have other financial institutions, as you can see. Since our topic is of interest is about microfinance, I've discussed initially about our banking. I also like to discuss about our microinsurance. We have three microinsurance institutions within the card group. We have the Card MBA. This is a mutual benefit association which is owned by the members. So for me, it's really ownership that is important. So since this is owned by the members, all policies, all regulations within the standards of the Insurance Commission and best practices are implemented in the Card MBA. So our membership owns our insurance company. And then we also have our non-life insurance. This is with the Pioneer Group. And we also have our other agency for non-life insurance. Now, what is our value proposition with these insurance companies? Our value proposition is that since they own it, we have very, very small premium, very cheap premium with maximum benefit, because our overhead cost is so small. It's only about 11 to 12% versus a commercial insurance, a number of them, not all, is about 40 to 60%. So can you imagine the cost of delivering the insurance to the clients? The other value proposition is that we are known as a 135 institution, meaning within 1 day, if there's a claim, we will be able to pay. If there is question, 3 days, and 5 days with finality if there are other requirements. So the speed of payment is very important for the poor, because you show how serious you are, and the access to get that kind of claims. So now, because of our digitization, we have now revolutionized our payment system using our cell phone, all kinds of these things. Digitization, we're now doing it at 8:24. Within 8 hours, there's a claim, we'll pay. If there is an issue, in 48 hours, 24 hours, we'll pay. So these are the things that we are doing in terms of microinsurance and microfinance. We have other allied institutions. I'd like to mention a few of them. This is grouped into health also. We own hospital, we own clinics, we have doctors and nurses, and we also have our pharmacy company that support our clients of very affordable and quality generic medicine. And then we have our own school of microfinance and microinsurance that caters to our clients, to our staff, in strengthening their skills and knowledge in microfinance and microinsurance and other kinds of capacity building. We also have the marketing support so that the clients, when they do microfinance, doing their business, we help them in the marketing, especially the agricultural products and other cottage industry products of our clients. This is because we're not really in the business of microfinance or microinsurance per se. We're in the business of poverty eradication. This is my mantra about Card MRI. We're in the business of poverty eradication. We want to completely eradicate poverty in this country. This is our geographical presence. As you can see, this is the map of the Philippines. We are all over the country. As of this date, we have about 3,500 offices and units countrywide. We're present in 85 provinces all over the country. 96% of all the municipalities and cities in our country, and 96% of all the barangays in our country. This means that the last frontier of the country, which is in Tawi-Tawi, the last frontier, the last municipality is Sitangkay. We're present there. 30 minutes away by pump boat, you're already in Malaysia. We're in the Balut Island. This is also part of South Cotabato. That's about 45 minutes to about an hour and a half. You're already in Indonesia. And we're in the northern part of the country, which is Batanes. Rinig mo na yung tilaap ng manok. To man these offices, we have about 17,500 full-time staff as of today. So these are full complement that provides microinsurance, microfinance services, and other kinds of services to our clients. We're also present in other countries. We're in Hong Kong, providing help for OFWs. We're present in Myanmar, Laos, Thailand, Cambodia, Indonesia, and Vietnam, and soon to be in Singapore to help OFWs. And this is how we promote. In other countries, we're exporting the technology of card MRI in microfinance, microinsurance, and the holistic approach in poverty eradication. What is our data? Today, we're now actually serving about 7 million families. These are poor families in the country. This is our outreach, and we're about 80% of the entire microfinance industry. So we're covering about 80%. Now let's look at the insurance. Our total insured individual is about 27,500,000 lives. This is the number of insured individuals in the country, and we're contributing around 80% of the entire insured Filipinos, and this is the poverty group in our country. Now, let's look at, because we're in insurance and in microfinance, this is an interest for you. Our repayment rate before pandemic is 99.49%. Because of pandemic, last year we had difficulty, and we're still moving on. Be that as it may, our repayment rate has been quite stable. It's now moving to 93 to 95%. So we're going back because of the resilience of our clients and our operational and financial sufficiency. By the end of 2020, we're still on the block. We are still financially capable and financially self-sufficient. How do we approach this promotion of awareness and microfinance and microinsurance? Let's talk about the target. Our major focus is the poor women. This is always my direction to our staff. Focus on the very poor women. Why poor women? If you're able to help the poor women, provide them all the opportunities for them to have an income, to do their business. The income derived from their business, the priority of the poor women will always be the family. An increase in income will always redound to the family. Food for the children, education for the children, amenities for the children, clothing for the children. That is what development is all about. Of course, the men is always very helpful, but you know, I've gone over Southeast Asia and I've done a lot of work. Sometimes men are so sociable, the priority is quite different. We like to drink, we like to gamble, a number of them. So this is our focus. And for me, what is important is covering the poor women in our country, the marginalized group, and the hard-to-reach area. To me, we go where institutions dare not to go. So we're present in all these small little islands. We're present into the hard-to-reach areas, in the mountain areas, and we're covering the indigenous people, the IP so-called in our country. Now, with the pandemic, we have looked at the pandemic as an opportunity for us to move forward in providing microinsurance and expanding our clients in the provision of microfinance and microinsurance. So we are now in the digitization. We've done our homework. We've done this 5 years ago. So with this pandemic, we are following the health protocol. Our clients need not go to our offices. They did not go to the banking premises, the NGO units. So we just have agents, and they can make payments over there. No, as my colleague have said, Dr. Arup mentioned about the use of cell phone. That's what we use. We're using cell phone. We have agents, so they can withdraw, they can deposit, we can also make payments. In insurance, that's why our speed is quite very fast. We're just using the cell phone, and they can just collect it into the remittance company. So we're using all this kind of gadget for digitization. And also our staff are using the mobile collection. So we have our tablets, so our staff are not exposed to this kind of pandemic. So we're able to do the health protocol. Now, with this pandemic, these are the opportunities that we have done. We're now in the field of, we're heavy in agriculture sector because this is an opportunity. We're now in the farming sector. We're also providing electronic and equipment gadgets, especially for education, for students, all food-related ventures. We're supporting this. Health-related projects, pharmacy, clinics, we're helping them. And of course, the microinsurance, we are, our products in microinsurance is that we have life insurance, loan insurance, we have disaster insurance. So at first instance, there's a typhoon, there's a calamity, because our clients, their houses are insured, we're able to pay right away within our 135 or 848 number of hours in terms of payment. Because for me, microinsurance should be believable. It's like deposit when there's a claim for withdrawal, then the insurance, when there's a claim, then you can pay right away. We also have come up with the business interruption insurance. So they were dealing with the poor. If there are business, if they have business, and the calamity or typhoon or other kinds of natural calamities happen, we have this kind of business interruption insurance. The health insurance also. So with this pandemic, we have pandemic insurance. We also have this health insurance, hospitalization insurance, because as Dr. Arup said, and my colleague also have said, that it is important that these insurance are actually safety net. These are important so that the poor will not slide back to poverty. Now, we also have our own agricultural insurance. Now, this is not to, this is also to encourage PCIC. With our agricultural insurance, within 1 day, 3 days, 5 days, we have devised a system that we can always also pay the claims of our clients. Because we've seen that if farmers, you're able to pay them right away, then their loyalty and affinity to insurance will always be there. Because this is where the insurance company are really needed most. So the claims payment is very important, and that's actually one of our value proposition. And then we're continuing our productive loans, our for SME and micro entrepreneurs. In the promotion of microinsurance and microfinance, we have our own School of Microfinance called the Card MRI Development Institute, and we have several microfinance and microinsurance training programs, both for our staff and our clients. Our clients also, we have the MBA coordinators, or we have this microinsurance agents, and we train them. So these are coming from the clients, how to make the claims, how to assess the claims. So we have brought down our claims payment. We don't have adjuster. We're using our own network, our own staff, and also our own coordinators, elected and appointed, coming from the membership. So we're able to cut costs, and we're able to find out more and accurate data coming from them, because they're right there in the village. And then we also, as a colleagues, we also offer entrepreneurship, bachelor degree in accountancy, information technology, and tourism. Right there, beside UPLB, just about 15 minutes away is our college in Trangkala Bae. No? We also have a campus in Mindanao, and we are actually producing graduates who are very focused on microfinance, microinsurance, and these are becoming our apostles, so to speak, our disciple in spreading microfinance and microinsurance program countrywide. And we're also, this is also where it's becoming a mecca, because this is also where other microfinance institution banks are also recruiting our graduates, because they have that kind of mentality, that skills right away. So this is how we are also helping the industry. We're also promoting the insurance through an industry. We are the founder. I founded this Remansi. This is the MBA industry in the country, the Mutual Benefit Association. Way back about 15 years ago, I started this industry so that this can be voice for the microinsurance MBA in the country, and they do a lot of policy advocacy in terms of regulation, in terms of policy with the Insurance Commission, with the Senate, with the Congress. And we also have established and supported the Microfinance Council of the Philippines. This is also the industry council, industry of microfinance in the Philippines. So we have very strong support. CARD is the major, one of the founders. Actually, I was the founding president of this MCPI 20 years ago. And now we're helping them. And also, this is the industry that is able to do advocacy in terms of policies for microfinance, make the environment more conducive. And we're very thankful that a number of our regulators are very responsive to this. And so we have very strong relationship with the regulators, the Bangko Sentral ng Pilipinas and the Insurance Commission, to name a few. They're very supportive of the program because of the financial inclusion. So we're very attuned and aligned with their financial inclusion strategy. And finally, before I end, I'd just like to make this statement that, you know, in microfinance and microinsurance, I think what is important is that when you want to push this, it is always the ownership that counts. For me, the issue of poverty is not only access. The issue on poverty is control of resources. So for me, it's important that you give control of resources like microfinance institution and microinsurance company, that these are owned or substantially owned by the membership. I've always believed in the golden rule, he who has the gold rules. So if our poor people are given that access to own the equity and to own ownership in the microfinance institution, whether this is a bank or other financial institution, and microinsurance company like the MBA, I think this is the way to go. You'll not talk about promoting awareness of microfinance and microinsurance. You're actually doing poverty eradication. Maraming salamat po sa inyong lahat.
All right. Thank you, Dr. Alip, for sharing with us CARD MRI strategies to promote awareness of its microfinance and microinsurance services. We note your special focus on the poor and the marginalized groups, and we commend you on your inclusive approach. With that, let us now move on to the open forum. We still have some time and we can address several questions. The first question that we have is for Dr. Arup. In the Philippines, there are many private commercial companies that offer insurance protection for life, property such as cars or health. But are there also private companies that offer agricultural insurance aside from the microfinance companies?
Okay, thank you for the question. And I believe Dr. Alice has just mentioned that they are doing microinsurance through Pioneer Card, you know. So there is definitely insurance happening in the private space, but very, very limited. The ADB at this moment is exploring some options to start some public-private partnership in that area. Of course, we will be working closely with the PCIC and have the benefit of their experience of long years of experience in the Philippines to see how products can be crafted and where claims can be more efficiently provided to the ultimate man and woman on the ground, basically.
All right, thank you, Dr. Arup. We have another question here for you, actually. It's related to accessing loan. How can a smallholder farmer avail of credit loan from ADB? Is this possible? Will you require them to put up collateral, and what is the rate of interest?
Well, ADB is a development bank. We generally provide loans to governments and large financial institutions. And the large financial institutions in turn on-lend to the beneficiaries. So what we call as a financial intermediary loan. So the simple answer is we do not provide loans directly to smallholder farmers since we are not a commercial bank, but we do support financial institutions, as you have heard from the PCIC presentation. We see how the ultimate beneficiary, that means the smallholder farmer, can benefit through our transactions.
Okay, thank you, Dr. Arup. Our next question is for our PCIC folks. Are you also offering a parametric insurance or index-based insurance, as Dr. Chatterjee described earlier, so as to facilitate the assessment of claims?
Okay, for PCIC, we have money to, I will add mamaya, money.
Okay, thank you, SVP. Currently, ma'am, we don't have a commercial product for parametric or index insurance, but we piloted several projects on weather index-based insurance. So yes, we did start with rice and corn, particularly excess and rainfall insurance type. So, but after that pilot, we didn't commercialize the product yet because of some issues that need to be addressed, like in particular on the issue of basis risk.
Okay, in continuation, we have experienced the UNDP partnership with Mindanao and also in Luzon. And we are finalizing this so that we can address the specific requirement and the wants and the real-time problem of the farmer, addressing the adequacy and also timeliness of the insurance payment. Thank you.
All right. Thank you, SVP Pales and Mr. Cortina. We have a question here from Dr. Takeshi Ueda of ADB. This is for PCIC. What are key factors that have helped promote PCIC's insurance services and other key factors that can help further promote PCIC's insurance services? Are there any laws or regulations currently hindering the promotion of PCIC's insurance services?
In terms of the promotion, so we, as mentioned in our presentation, the LGUs as our partners are actually valued in terms of they are the ones who help PCIC promote our products and services. So we collaborated most of the time with our local LGUs. And of course, other than LGUs, we have the lending institutions, rural banks. So they become our partners as underwriting agents and solicitors. Now, I believe there are pending bills now on strengthening PCIC. So yes, we have this budgetary constraint since we are given only 3.5 billion, and that's not enough to cover all those farmers and fisher folk listed in the rsbsa database. So I believe with that pending bill on strengthening PCIC, that would somehow capacitate more the corporation and expand more its coverage nationwide.
So
Okay.
in addition
Yes,
to, there is a very good news now. Just 1 minute ago, I talked with my president. present on the hearing of the House of Representatives for the what we call PCIC bill, increasing it to 10 billion. It is positively approved. And so this is good signal for us to go on with our mandate. And as far as the question is concerned, we really work hand in hand with one DA. All programs of the DA is automatically insured with us. And so with the lending institution, if it is loaning process, so PCIC serve as the collateral substitute. So in nutshell, it is national, local, and a lot of what we call province, what city, and also municipality, PCIC memorandum of agreement, shouldering or giving subsidy for the farmers not listed even in the rsbsa. So rsbsa, as a review, this is a listing of farmer. Once na member, each farmer can avail of the free insurance coverage of all this program except yung CLTI. Thank you.
All right, thank you, SBP Pales and Mr. Cortina. We have another interesting question here from Dr. Takeshi again. He is asking, so African swine fever is spreading lately. So he's asking if there is anything that PCIC intends to do on this matter.
On that note, in fact, that is now the real-time problem of the ASF. And because PCIC also addressing what we call the real-time problem, so we are covering this one. So what we did is we even increase the coverage of the partners and what we call the breeders, aside from that, from the 60% loss cap to 100%. What I'm telling here is, if it is small farmers, they are automatically under what we call, if listed in rsbsa, their insurance for that particular project is free. And on the part of the hog raisers, big hog raisers, we have also the intervention of the DA, which PCIC implement. So on that aspect, it's now beginning the repopulation of that particular ASF affected area is being addressed. And also we are really looking into giving a strong signal that the PCIC will support the small and big hog raisers to support the food sufficiency program of the Department of Agriculture of the Philippines. Thank you.
All right, thank you, SBP Pales. One last question. Is rsbsa registration required to access PCIC insurance services? How does rsbsa help PCIC operate?
Okay, I will answer that, ma'am. On that rsbsa, it is the requirement for the farmer to be registered if and when there are some loaning facility. One of the question, or if it is just to mention some financial institution, they will ask if you are registered. If there is what we call the program of the government, the first question, are you RSBSA member? If not, we will help DA register this farmer, because onwards they can avail of this program of the government. So it is very important, and we help government. These farmers will be listed in RSBSA. So that is why the DBM direct to PCIC give that particular, just to mention, 3.5 billion across the country shared by all regions, so that this what we call servicing of the farmer on the subsidy, on the pre-insurance can be effective to small farmers. So in nutshell, on the summary, RSBSA is very important that this farmer will be registered, and we encourage all of this. Thank you.
All right, thank you, SBP Pales. We have a question here for Dr. Alip. It is our wish to create a new program in making our ram pump irrigation systems available to small individual farmers. Till today, most of our systems have been for associations and financed with grants. To make them available to small individual farmers, we need to partner with an MFI to make this work. Would it be possible to work out with CARD a special window for ram pump systems for irrigation?
Yes, we're actually now heavy on agriculture. We're willing to entertain it. And if you can just let me know who that proponent is, then we'll be happy to cooperate. And we'll be happy to look at it and it can either go to our special program under our NGO microfinance program, or if it is on a commercial level, then we can pass it on to our card SME bank that is able to provide higher and bigger loans. So it's possible, no problem.
All right. Thank you, Dr. Alip. It is 5 minutes past 11:30 and we have several questions lined up. But in the interest of time, we will be sending your comments and questions to our speakers for them to answer, and we will share them via email to those who asked the questions. Before we close this webinar, may I request our speakers for some closing or takeaway message? Let us start with Dr. Arup.
Well, thank you for providing me this opportunity to share some of my thoughts and ideas. Insurance, of course, in the Philippines is in the public sector. And if we move to transition to the private sector and have private insurance companies in the space, then of course it will help in widening and expanding the market. But at the same time, the beneficial role which the PCIC plays also needs to be recognized. Like just now, there was an example where it was asked whether swine fever should be covered or not. In a private insurance contract, retroactive coverage is almost impossible. That means once there is an outbreak, you cannot expand the coverage without providing for more premium. So these types of things may not be possible, and it is all about managing expectations. So that will be part of the government's role, and government can also always provide such relief to the smallholder farmers through PCIC or other entities. So that is something we need to understand. And the second is there is large amount of awareness required across all stakeholders. And that is something we need to do on a very, very conscious basis. Of course, financial technology has its role to play, but I think what Dr. Alip mentioned, linking credit with insurance is something we need to look at more closely and not see insurance in isolation. Both credit and insurance should go hand in hand. Thank you.
Okay, thank you, Dr. Arup, for that key takeaway. SVP Pales and Mr. Cortina, some final message?
Okay, thank you, Ma'am Jean. First is thank you for SEARCA for allowing PCIC to be here. And I wish to summarize that for the small farmers, if you are not member of the rsvsa, please go to your DA counterpart in the barangay, what we call in the municipality, and upstream so that we can serve you well. And to Dr. Arup, thank you, my fellow speaker, for having emphasized so much on the utility value of crop insurance and so highlighting the importance of insurance. Dr. Alip, personally, the Attorney Joby Bernabe is having hello with you, telling me you're magsaysay award and so on. And with your being one of our former, what we call board of directors, thank you so much. And also all the people online, thank you for participating. I hope we can help you more. And in case you have some coordination with us, please feel free to have our email as provided by Sir Cortina. And we have, as I've said, so many contacts in the region, the province, and municipality. All in all, thank you so much. And with my fellow speaker, thank you, SEARCA, and thank you, Ma'am Jean. God bless.
Thank you, SVP Pales. Mr. Cortina, do you have some final message?
Just for all our farmers listening now or watching this FB Live, so we're encouraging you to avail, if you're in the rsbsa database, to avail of the free insurance coverage provided by PCIC. So I guess that's all, ma'am. Thank you. Thank you for the opportunity.
Thank you, Mr. Cortina. Okay, up next is Dr. Alip. Dr. Alip, some final message?
Thank you so much. Well, thank you also to Dr. Arup and also Mr. Pales for this. Again, I have an engagement again with them, ADB and PCIC. It's always nice to hear from them. But my final remark is really microfinance and microinsurance should be treated as twin sisters. They're very important in eradicating poverty. And I think if we really For microfinance, there's a chat here. There's a question also for me. What about who can be members? Anybody can be member from card because we have bank. We can be providing insurance even to government employees because we have a number of them also, especially the retired who are members of card, and they were able to provide the loans, and they are also part of our members in our insurance. But there's one thing I'd like to also maximize and optimize my opportunity to join this seminar. You see, in insurance, there is a gaping hole that I think that needs to be addressed. And it is very important to do this and to really push this. Life insurance, the premium tax is only about 2%. That's why we can cover life insurance quite easily because this is very cheap because the premium tax is only 2%. For every peso that you pay in terms of premium, the tax is only 2%. 1 peso, so it's only 2 centavos. What about the non-life? The non-life insurance, the premium tax is about 26 to 27%. For every peso that you pay as premium, 26 to 27 centavos is right away paid to tax. That is why the non-life insurance, like disaster insurance, the crop insurance, agricultural insurance, health insurance, is quite expensive. So we need to lobby our lawmakers to make this non-life insurance affordable. Dr. Arup made mention about this agricultural insurance, including my colleague in PCIC, Mr. Pales, made mention about this agricultural, the swine flu. But if you want the private participation, private sector participation, you must have an equal level field. And I think we can address this and attempt to really lower down that non-life premium tax. I think there will be many players from the private sector. And this will, again, help our people in the poverty group and also help more participation from the private sector. And therefore, government need not subsidize agricultural insurance because this is the law of numbers. This is the law of efficiency. So thank you very much, and I hope you have a good day.
Thank you, Dr. Alip. On behalf of SEARCA, led by our director, Dr. Glenn Gregorio, we would like to express our sincere gratitude to Dr. Chatterjee, Mr. Pales, Mr. Cortina, and Dr. Alip for taking the time to join us today. It has been a pleasure to have you with us this morning. That ends our webinar, but before we close, please let us know what you think about this webinar by following the link to a quick feedback form shown on your screen. The same link will direct you to the request form for the e-certificate. Your feedback will help us improve our online learning events. Please note that we will only accommodate requests for e-certificates within 24 hours after the end of this webinar. Kindly wait for your e-certificate to be issued at least within a month, as we receive a lot of requests for e-certificates. Thank you for your understanding and patience. Please join us again for our next online conversation on April 14, 2021 at 10 in the morning. We have invited speakers who will talk about their experiences and insights on enhanced agriculture and rural development towards climate resilience. Please don't miss it. Let us help one another get through this COVID-19 pandemic. We hope that as we go along, we will be able to create a community of better, bigger, and smarter farmers and farming communities. Once again, this is Jean Labios of SEARCA. Have a good day, stay healthy, stay safe, and goodbye, everyone.